How could this potentially benefit? What areas of energy could it possibly benefit?
Yeah, I mean, so far investors, I think, have leaned pretty heavily into the themes of the PTC, so the production tax credit as opposed to the ITC. I think in the long run, you're going to have a long-term federally uncapped subsidies in both the PTC and ITC. But in terms of the production tax credit, the winners are really the manufacturers. If you kind of look at the U.S. domestic landscape for solar manufacturing, is really First Solar is the only scaled up player. And as Pippa kind of noted earlier, most of the production is still done abroad. So the question now is how much of your foreign production, which is primarily Asian, is going to shift, and will we see kind of vertically integrated supply chains start to grow in the wake of the IRA? And that's the hope of the government. I think that's kind of our base case right now, is that it is going to attract a lot of new capital.
So you're saying First Solar in particular is a winner, but in general, it's a broader tailwind for the solar industry, it sounds like. What about oil and gas?
Yeah, I mean, the IRA, I don't think was really particularly focused on oil and gas as much, aside from maybe carbon capture and sequestration. I think could be a potential kind of medium-term winner, although I think the biggest long tail of the clean energy transition is going to be on the hydrogen side, and I think that the green hydrogen is going to kind of win out over like a 30-year period versus the blue hydrogen that would require some of these subsidies on the carbon capture.
So most of it's for alternative energy, including the wind industry as well. So they're going to really benefit.
Yeah, I mean, wind provides the generation, and I think you've kind of seen a dual track. I mean, part of the reason why you're seeing so much wind and solar goes back, to sort of the Obama administration, but in Europe, actually, the German and Spanish feed-in tariffs really flowed a lot of money into developing the sector, really took down the costs of generation on a wind and solar basis. And the other thing that those two types of power generation enjoy is that they don't have the variable cost of getting minerals out of the ground, and as you do in the hydrocarbons industry. And so I think we could eventually see that extended to the hydrogen market too, as electrolyzers get more efficient. And that's really, I think, the long-term problem for the oil and gas industry, but it's still going to be a long-term bridge fuel.
Let's talk more broadly about domestic manufacturing. Does the IRA change your outlook when it comes to nearshoring or things being made here in the United States?
Yeah, I mean, it's definitely going to be a growth driver for U.S. production, which has essentially been, not really a very material player in terms of manufacturing relative to our consumption of solar, for instance. But I think what is interesting is the guidance that came out recently from Treasury as to what percentage of the components on a cost basis for U.S. production needed to be made in the U.S., and it was about 40%. So that's going to leave a lot of ability for say foreign manufacturers that have vertical integration outside the U.S. to decide where the cost is in their production. I think that's going to lead to a higher amount of foreign content making it in and getting the domestic adder, if that makes sense.